Hey everybody, TG Watkins here. It is May 30th, and this is your Daily 5. All right, so now that we are back from the Memorial Day weekend, I just wanted to wish everybody a happy Memorial Day weekend. I hope everyone had a good time. My dad was in the Air Force. He's still alive. We were out this weekend, and we were flying in our Glass Air 3. Basically, I grew up in airplanes, and so this is one of our weekend activities. Both my grandparents were in the Air Force. My uncle was in the Navy, so big family for that, and Memorial Day is a good weekend for us. All right, so let's dive into the charts. Now, last time I was with you guys on your Daily 5, and I was talking about how I was seeing some bearishness out there. Well, I want to follow up on one of the stocks ETFs that I showed you, EWG, which is the Germany ETF. You can look at this, EWQ, which I think was France. They're kind of looking similar. And the thing that I was pointing out was this, the Moxie indicator on the daily chart not looking too good, even though we had price all the way up at a new high. We were starting to see some negative divergence, and then it really kind of, very, very weak right there. And then what we could also see here was that we had the Moxie price trigger, meaning that the Moxie indicator was now going negative, which meant energy and momentum was now negative. And then we could see here that price kept trying to pop up over the hourly 50 with the Moxie indicator below zero. That's an inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. And we got one more little bounce in through here. Again, another inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below zero. And that has basically been leading price lower. And you can see leading price lower. And now we also even have a daily Moxie price trigger to the downside. So this is one of the things that I was looking at. And I showed you guys last time on your Daily 5 about what I was seeing and why I thought that, maybe we were going to see the market start to pull back, look kind of weak. Internals breadth not looking too good. But then NVIDIA and the whole semiconductor index just started to explode because of their earnings and along with AI. So let's take a look what I was seeing on the S&P and then how the S&P changed. So remember, compare it a little bit to EWG, and you can see we had that negative divergence. And then you can see here we had price kind of up, and then again the Moxie indicator kind of not looking super great. We had price higher, we had the Moxie indicator lower, and it looked like we were going to maybe continue this trajectory, or this sideways movement was going to resolve to the downside, so it seemed. But then we had news, debt ceiling finally was getting talked about, and I think we're seeing some resolution there. Then NVIDIA came out with earnings, and that kind of lit a fire. And so what happened was, well, we got the 8 over the 21 that stayed positive, so that never crossed negatively. And then we actually finally broke out of our pennant, and we got this move up here. And then another big kind of dip in through here, and then we're back up again. All through that, the Moxie indicator managed to keep its height, its elevation above zero, and actually started to regrow a little bit and tell us that momentum kind of re-participated and came back up. Now, we'll just have to see how long this lasts, and if it, again, is a bull trap, but so far so good. It's doing okay. Now, of course, we know the NASDAQ is off like a banshee. The Dow is basically just hanging out sideways, and the IWM, I'll get to that in a second, didn't fall apart. But if we look underneath the hood, we can see that the SPY has been moving up, SPX has been moving up, as we see, but internally, we really have not seen anything change. For a while, we were looking at this and saying, hey, at least it's not going down. We were kind of noticing that, at least it's not going down. And then we had a bit of a tick up. And you know what? We're right back down here. And even the 50-day, we're starting to lose that one again. And the 200-day has been moving down. So, this market is basically very, very narrow, the narrow breadth. And the participation has been in only a handful of sectors and a handful of names. And other than that, that's what's really kind of keeping the market up. And I think that is kind of the difference that I was seeing, say, from the EWG to the SPY. And gosh, you can even look at RSP, which is the equal weight of the SPY, or even a QQQE as far as equal weight goes. And you can see some of those differences. Now, one thing that I had been talking about also was the IWM, and I was on StockCharts in-house with them at their studio, and we were right about here, I think, talking about the IWM. And the difference that I had been pointing out is that this time price actually did get rejected by the daily 50, and the Moxie indicator was definitely below zero. And we did get a move down, but right here, right at the double bottom and right at the previous low that it had been hanging out at for an entire year, right when we were looking at this and seeing if it was going to finally roll over, nope, it goes the other direction. Now, what I was still looking for a pullback, and now we've gotten that pullback. So at this point, we're just going to have to keep watching and waiting and seeing if this area right in through here, about 175 for the IWM, actually ends up holding. And if it can hold and continue to move up, okay, then we'll have to be bullish on this. The Moxie indicator seems to be doing better. We'll have to see if that actually continues to move up. However, if sometime down the road, this is like this, and we start to roll over again because of the whole breadth situation, then maybe what we'll have to do is just chalk this up to a whole bunch of chop until it finally resolved one way or the other. But this is what's happening with the market. We're just seeing a bunch of sideways action. Now, maybe it's because it's summer and kind of we got in the doldrums, but things are just kind of, if they're not a winner, they're either a loser or they're really not doing much. And that seems to be the bifurcation in the market right now. Speaking of, winners or not winners, news over the weekend. And I actually heard this from one of the YouTube channels that I like to watch. They tear apart the factory cars, and then they help aftermarket, and they help all the OEMs kind of put all their stuff together. And they heard that the news about actually a while ago, Tesla was saying, hey, everybody in the automotive industry, how about you use our plugin, our charger, our ports? We'll give them out. We won't do the whole intellectual property situation, and they're going to allow their patents out there. And I'm sure there was some hesitation, but Ford finally said, okay, we'll sign on with this. And I think the reason is because their plugs were big and clunky and not user friendly, and Tesla really has a pretty good infrastructure when it comes to the charging stations. And I think Ford was thinking, okay, if we're going to get on this bandwagon, we need people to not be hesitant about EVs, and so we need a better charging system and a charging experience. And so I think that's where they said, you know what, Tesla, you really do have the better product here, and maybe we'll start making things consistent throughout, standardized. We'll be standardizing everything. And so we have been watching Ford for a very long time, not really planning to do anything about it, but just noticing that it didn't want to go lower. And then you could also see we were in a pennant. It's got a bit of a wedge in through here. And you know what? Based on that news, and actually just leading up to the news, finally breaking out of that wedge. Now, I don't know if this is a great place to buy, but the fact that it is breaking out, maybe you should be aware of this and see if there's a pullback or something to maybe catch later. We'll just have to see. But so far, I wanted to bring that to your attention that we are getting a breakout of that pennant, that shape. All right, so then we come over here, and another way that I'm looking at the small caps and IWM and just kind of the overall health and participation of the market is I have actually been watching the ARK ETFs, ARKK, ARKF, and some of the others, and say what you will about them. But what I'm noticing is that they've basically stopped going down, and they are starting to actually get over some of the higher time frame moving averages. This is a weekly chart, and you can see it has not been able to get past its weekly 50 until now. Now, I don't know if this is going to sustain or how long it's going to go for, or if this is a flash in the pan, or really we're going to get over the weekly 50, but we're just going to chop sideways. None of us really know this. But what I can tell you is that basically price hasn't wanted to go down for a very long time, I think about a year. And we are now starting to break past moving averages. So if breadth can start to pick up and we can start seeing some more broad-based support out there, then there are certain names out there that have been beaten up they've been flat for a year, they've been beaten up for 2 years. And if they can just start to kind of regrow a little bit, we might actually be able to see some participation out there. It's still pretty challenging. As I said, breadth is still very neutral to down. And but it is interesting to see that there's some stuff like this kind of just starting to make waves. And even with the Moxie indicator, we've had price below the daily 50, the Moxie indicator above 0. That's a trampoline move. And we've had 2 trampoline moves here, price below the 50, Moxie indicator above 0. And so, we are starting to see some bullishness from names like this. And I find that something to be paying attention to and see if it's going to do something. So hopefully you guys enjoyed this, and thank you for checking out your Daily 5. If you guys want more information about me and the newsletters I put out and how I look at the markets, anything else like that, come over here. You can do the free video newsletter that we do over at Profit Pilot, and then we got all the social medias. So it would be great to see you. Always, we are running a $7 trial for 30 days. And in the Moxie trading room, we have live trading, interactive question and answers, real-time alerts. I mean, we just have all this stuff. Come on in. You can talk to me. I'm on the mic and the screen just like this a lot, and you guys can ask questions and I can help educate you. So hope you're enjoying it, and we'll see you at the next one. Thank you.